Hello, and welcome to another video. This video will be about Forex fundamentals. Just giving you a brief overview. We are not going to delve in any detail, just a very brief overview of what you need to know about Forex fundamentals. First, investors look at the markets in two perspectives: risk on, risk off. Risk on is when the market is showing a positive economic data, strong corporate earnings, and the general perspective is optimistic. So this is where things are favorable. So investors favor stocks, commodities, and currencies with higher interest rates and stronger growth potential. Risk off is an environment in which investors seek safer assets. During the reasons for risk off would be something such as geopolitical uncertainty, economic downturn, financial crisis, global events. Those are the things that would lead to investors going on a risk-off investment strategy. So when there is a risk-off status, what happens is investors usually want to go to safe haven currencies. US dollar being one of them because it's the primary reserve of the world. Swiss franc, that's always been in political neutrality. Japanese yen, it's got very low interest rates. Japan has historically maintained this. And gold, this is what I do personally. I try and invest my money or hedge trades on gold when there is any news of any war, may it be Russia, Ukraine, Israel, Palestine. Those are the things that do drive gold on a bullish momentum. These are the main banks around the world: Fed Reserve, European Central Bank, Bank of Japan, Bank of England, People's Bank of China, Swiss National Bank, Reserve Bank of Australia, Bank of Canada, Reserve Bank of New Zealand, and Bank of Russia. So Jerome Powell, who is currently the head of Federal Reserve, and these banks, what they do is they determine the interest rates, which we'll speak more about in the video. Inflation versus interest rates. Inflation is caused when the goods of a country is going upwards, so the purchasing power of the people is not so great. Basically, what happens is the Reserve Bank of the country tries to maintain the inflation percent by using the interest rates. So when inflation is increasing, they would increase the interest rates so that with the hope that inflation would drop. So central banks do this. Investors do monitor this very closely of a country to make decisions of their investments. These are some of the news events, interest rate decisions, employment reports. So NFP being one of them. It happens on first Friday of every month. It's a US data. It does, if you're trading a USD pair, it will have a massive impact on the market. GDP, CPIs, these are some of the things you need to look for because they do have cause spikes in the markets, major spikes in the markets. So you will see, 100 pip moves with some of these news. There are news calendars, which I'll post on the description. And that's it, folks. Thanks a lot for listening. If there's any questions, please drop them on the comment box. I'll be able to answer them. Please like, follow, subscribe, and thanks a lot. Have a great weekend, folks. Thank you.